Hi there. Tell me, what is the fair value of Alibaba? As you can see, the market cap is around 200 billion. And some people think that the market cap may go to 2 trillion. If that happens, then your return will be quite amazing. They have more opportunities, e-commerce in China and international, cloud computing, plus many others. They are investing in many businesses, and some of them may do quite well. That's why, if you buy below the fair value in any business, you can make a lot of money, especially if you have a margin of safety. And for Alibaba, at the current price of $78, you have a margin of safety. So in this video, I'll find out the fair value of Alibaba, what the market expects, and then my own estimates. As you can see, the revenues expect to grow more in the future, also their free cash flow and earnings, and that's great. And based on these estimates, you can calculate the fair value. First, let's see the risk, using the free cash flow, what the market expects. As you can see, if Alibaba delivers what the market expects, these numbers, and they don't grow more in the future, then the fair value will be around 240 billion for a 10% annual return. Or if you want the fair value per share, that would be around $95. So based on this scenario, the stock price is quite cheap. You have a margin of safety. However, if Alibaba grows more in the future, then the fair value will be even higher. As you can see, it might be over 700 billion or $280 per share. That can also happen. They have more opportunities. As you know, China economy is expected to grow by 5% a year in the next 10 years, and that's quite amazing. Plus, Alibaba is expanding internationally. Maybe you saw that their international segment delivered an amazing growth rate in the last quarter, over 50%. And that's amazing. Of course, they also have other opportunities. Cloud computing, plus they own 43% of Ant Group, which keeps growing. Of course, now they're facing some problems from Chinese regulations. But in the long term, that may be a new opportunity for Alibaba. According to Jack Ma, Ant Group may become larger than Alibaba. I don't know if that will happen, but we have to be aware of that opportunity, as Alibaba owns 43% of it. So if Alibaba keeps growing, they deliver higher and higher free cash flow, then the fair value may be around 700 billion for a 10% return. And at the current market cap, you have a huge margin of safety, over 50%. And that's amazing. Your annual return may be around 50% a year for the next 4 years. Of course, if Alibaba delivers these numbers. And that's amazing. At the current price, to have 50% a year, you will make a lot of money. Now, don't forget the risk, and also the normal case, where they might grow, but not that much. For instance, if Alibaba grows with the economy, and the multiple might be around 20, then the fair value will be around 477 billion, or the fair value per share will be around $187. That's still good. You still have a huge margin of safety, more than 50%. Be aware that these are the analyst estimates, what the market expects. Alibaba might deliver higher numbers or lower. That's why you have to look at all the scenarios and assess the final fair value. How much you can expect from this business. As you saw, the risk is quite low at the current price of $78. As you can see, the PE ratio is about 11%, and Alibaba is a growing business. This is quite cheap. Now let's see my own estimates. As you see, they made about 11 billion in free cash flow in the last 6 months. And if they make 20 billion in free cash flow a year, and they keep growing that number, then the fair value may be around 360 billion for a 10% annual return, or $142 per share. Now, if you assume that Alibaba will grow only by 5% in the last 5 years, then the fair value will be lower, or around 300 billion, or $118. However, if you assume that they will grow only by 5% a year, then the fair value will be around 240 billion. But as you know, Alibaba has more opportunities, and their growth rate may be higher than 5% a year, 10%, or it might be even more. So the fair value depends on their future growth rate, how much they'll grow, especially how much their free cash flow will grow in the future. Because as you know, the stock price follows their earnings or free cash flow in the long term. In the short term, you might see some declines like this, over 70%. And this happened because of many reasons. China regulations, a decline in their earnings, the pandemic, and many others. And this might be your lifetime opportunity at the current stock price. But it's up to you how much you want to invest in this business. Be aware of the risk. Don't invest all your money because anything can happen. But you also have to be aware of this opportunity and take advantage because your return might be over 80% next year. And that would be great if you can double your money in just 1 year. So it's up to you how you want to invest. And if you have any questions, please let me know in the comments.